Folks, welcome back to another episode of Uncontested Investing. I'm your host, Nate Zielinski. We have another guest on our table today across from me, Larry Friedman from SDF Capital. Happy to have you, Larry. Thank you for taking the time out of your busy schedule to join us. Just based on the conversation we've had so far, I'm sure you have a lot of insight for our listeners. I'm happy to get this started. So if you want to introduce yourself and
Awesome.
we can get going here.
Awesome. Well, Nate, thanks for having me. I really appreciate it. So just quick background about myself. I'm currently in a real estate investor. We do about 100 transactions per year. My background is in accounting and finance. And essentially, we started like most, just doing one transaction here, one transaction there. And we've really built this into something. So we primarily operate in the tri-state area. We do a little bit in Pennsylvania as well. Tri-state meaning New York, New Jersey, Connecticut. Mm-hmm. And we wholesale, we fix and flip, we hold rental property, and we also do some education.
Very cool stuff. I think that's a great place to start. So many times you hear about the passive investor, somebody that does it as a side hustle. You, with your accounting and finance background, you have a CPA too, I believe you mentioned.
Yep.
That's got to give you a leg up, I feel, whenever you want to transition into another venture that's strictly about, the bottom line and making deals that make sense, right? So do you think that accounting has given you a leg up? Do you think people come to you more for information because you have that wealth of knowledge as your background?
So I'm going to say yes, and I'm going to say no, which is maybe not the answer you wanted. So yes, because obviously I have the analytical ability to analyze deals, and I can tell you that that's critically important in this business to know your numbers. So I'm able to put models together and really able to quickly decide on paper if the deal makes sense. Now, the no part of it is I guess I'm a little bit conservative. And so my business partner and I are always arguing, I'm not seeing the upside, I'm not seeing this. So, we could have some analysis paralysis. I don't have that. But I think because of the accounting background, everything having to add up, it sometimes gives me pause on deals that I think if you take a little more risk could be better. So
very interesting to have that devil and the angel on your shoulder.
Exactly.
Right? I think that's a pretty good segue too, because spoiler alert, we're looking to have your partner on the podcast as well, Frank. When it comes to doing this together, building a team, how important do you think that is, right? To have somebody in this venture with you. A lot of times people try to go at this alone, and it's a lot to handle, right? If you're not really prepared for everything that goes into running a successful business, especially when it comes to real estate investing. How much do you think that team aspect has helped you guys succeed?
Yeah, well, Nate, you hit the nail on the head. This is a lonely business to start with. So I think having a partner has been amazing. Now, it has to be the right partner. Frank and I built a very successful real estate brokerage business together. So we spend more time probably with each other than with our significant others and family. So that partnership has to work. You have to have trust. You have to have really the things he likes to do are the things I don't like to do. So you really want to bring, I guess, two different skill sets to the table. So that's been so I would say that having a partner is tremendous, and it really allows us to divide and conquer as well.
What you guys have become a super investor.
Yes, exactly. It's 1 + 1 is 11. Basically.
Love that. So you transitioned into Wall Street after the accounting background. Can you talk about that a little bit? We had a previous guest with some Wall Street experience, and talking about the intensity of the industry, right? It's very attracting. There's some lure to it for sure, but there's also some burnout. Can you talk about your experience on Wall Street?
Yeah, I can. So basically, when I graduated from college, I started out in accounting, as I mentioned, working for one of the big six, which now is big four, I believe. And then all my friends were making more money than me, and they were on Wall Street. So I said, all right, well, I'm in the wrong place. And for me, in my mindset, it was always about money. Like, I don't care. I just want to make money. Mm-hmm. And that led me to Wall Street. And I started at one firm, went to another firm, each time searching for more money. And finally, the last firm I ended up, so I was at lots of firms, Bear Stearns, I was at UBS, and ultimately I ended up at a small boutique firm. And I got paid a tremendous amount of money. At least at the time, for me, it was a tremendous amount of money. But literally, I had to be in the office between 6:30 to 7, and I was on a good night coming home at 9 o'clock. And kind of the straw that broke the camel's back for me, I asked my boss at the time, can I get engaged on a Saturday? And he said, no, you can't get engaged this Saturday. It doesn't work. And then I thought, wait a second, I'm asking permission to get engaged on a Saturday, and I'm being told no.
Yeah.
So and then on top of that, just the stress and the pressure. So I couldn't take it anymore. And that led me to leave that profession to start. And actually, I took a detour and was in real estate brokerage for a while.
Okay, yeah.
Prior to getting into the real estate investment business.
Yeah, you're covering all angles from the experience background. So I mean, that's a great story. I think that's important for listeners to understand as well, right? Like, this doesn't have to be you're fresh out of college and I need to invest in my first property. The only way I'm going to get successful in this business is just go right into it right away. A lot of people have, just tremendous life and professional experience. And then, they know somebody or they find somebody or just comes across their desk one day and they kind of have that aha moment of like, okay, maybe I should try real estate investing. And then it kind of takes over from there.
Right.
That seems like it was your experience. Now, you did have a funny story to tell me, though, that kind of perked your ears up a little bit when you did start deciding that real estate was right for you. You lent a friend some money and something happened from there?
Yeah, exactly. So when Frank and I exited the real estate brokerage business, we really didn't know what to do and didn't have a clear path. But at the time or prior to that, we did lend one of my friends some money who was a fix and flipper. And I think we got a 10, 11% return, which was pretty good at the time. And I looked at the HUD, or closing statement as we call now, and I saw they made something like $30,000 or $40,000, and I made maybe $8,000, which still was good money. And I was wondering, well, wait a second, what's going on here? How did he do that? So I asked him questions, and I didn't really get the answers that I wanted. I don't think he was being evasive. It's just I didn't fully get it, and I wanted to learn more. And that kind of led me and it led Frank to decide to, all right, how do we flip houses? And actually, our story, we ended up at a franchise initially, which was great at the time. And obviously, we outgrew it and started our own business. But that was how I got my first exposure into this whole flipping business.
Very cool. Hey, however it works, right?
Totally.
Cool story there. So the education part you talked about there, right, of him not really, giving you the answers, was it learning by trial and error for you? Was there any education that you seeked out to kind of bolster this venture, or did you guys just kind of say, let's do it together, let's figure it out on the fly and kind of see what happens?
So it's interesting. At the time, when we've been doing this close to 10 years, at the time, there wasn't a lot of private education out there for gurus, if you will, people that are doing it. So we wanted education because in this business, I think if you start and don't have any knowledge, you can get badly hurt. And we've seen that happen. So we did seek out knowledge, and what we did is we joined the franchise. And it was a very large franchise, which, as I said, initially was awesome. We did learn some stuff. We quickly learned that there was a lot more to learn, and we didn't need the franchise. And we'd rather have people in our local market teaching us that knew what they were doing. So we ultimately left the franchise, and we joined a bunch of masterminds and had some private coaching, which helped us, which I think is taking us to where we are today.
Yeah, I think education is so valuable. It's something that we preach at RCN Capital. We try to provide for the people that, come through our doors and say, hey, there's education out there if you want it, right? You should take advantage of it. We offer it for free because it's so important for people to wrap their heads around. So the message that we try to convey to the audience, right, is like, take your time, make sure that you're, doing the studying, doing the proper research before you jump into this. Because, as you said, the negative side of it can be very damning.
Oh yeah. You could, if you have one bad transaction, it can take you out of the business. Mm-hmm. So absolutely, that's good stuff.
All right, I think that's a perfect segue. Let's jump right into it, the Money Making Minute segment. So this is going to be investment strategy, app, skill, part of your daily routine. What leads you to success that you feel that, investors or listeners can take with them? Maybe, like I said, it's a strategy or just something that you simply do every day that kind of reinforces success for you.
So one of the things that I really enjoy doing is meditating. I need that quiet time. It really helps me to reset. It's something that if you probably asked me 7 years ago, would you meditate? I'd tell you no. I maybe even would have laughed. But now it's my time. It just clears my head. My mind races all the time. And there's always a lot of things going on in this business and in personal life. So for me, it's meditation.
Yeah, Larry, I think that's a great answer, right? Because this industry, we've heard so many stories, 24/7, the phones never shut off. I think it's important for people, any way they can get that avenue. It doesn't have to be meditation. I have never tried it, but everybody that does it,
You might want to try it.
right? Everybody that does it seems to recommend it with no hesitation. So, whether it's the gym, whether it's meditation, a massage, if you want to treat yourself right,
Totally.
There's got to be that reset button because this is the burnout potential in this industry is so high.
It is, yeah. I totally agree.
All right, that's some great insight from Larry Friedman. We're going to take a quick break, give our ads. We're going to take a quick break, give our sponsors a shout out. We'll be right back with more Uncontested Investing. REI Inc. is the premier monthly publication for real estate investors. Dive into a wealth of expert insights and knowledge from industry leaders and gain valuable regional market insights, ensuring you always have the best information right at your fingertips. Visit REIInc.com to elevate your real estate investment game today. All right, we're back with more Uncontested Investing. I've got my guest here, Larry Friedman from SDF Capital. Larry, I think you touched on it a little bit briefly a few questions ago, but some pretty significant growth for you over the past few years. You started at one transaction a month, really grinding, playing the long game, being patient, and now you're closing close to 100 deals a year. What's been the biggest challenge as you've transitioned from one deal a month to 100 a year? That's a pretty significant jump.
Yeah, and I can tell you it didn't happen overnight, but it has happened. I would say probably the biggest challenge in that growth is really managing and having processes in place. Because I can tell you when we were doing one deal, and it was Frank and I was a transaction coordinator. We were splitting integrator responsibilities. Frank was the buyer. And as you grow and spend more money, you need to now have roles, responsibilities, and systems and process. So that really, for us, was the hardest, thing to adapt to. So we had to create things on the fly. And we, over the years, had a lot of coaching and at times, because I think what happens is the business works in cycles. So 1 to 2 deals is one cycle. When you go, say, 5 to 6 deals, that's another cycle and another need for more system and process. And then 8 to 9 is even different than that. So it's just an evolution of the business.
Nice. Now, when we talk about growth, do you think that those processes that you used to see as a challenge, like once you solve those, was that, okay, the growth is going to be exponential? Or is there another factor mixed in there that kind of the combination of overcoming that challenge and this has kind of led to that? Like, is there, on the flip side, right, is there just something about the two of you, something that you've seen, maybe something in the industry that you guys keyed in on that has allowed to help you?
Well, I laugh because Frank and I are both pretty aggressive in the sense that once we see something works, we try to pour gasoline and ignite that fire. So that's gotten us into trouble sometimes because, when you're we spend more money and in New York and some of the markets we are working in, they're slower markets in the sense of the turn time. So you spend money today, you may not see the return for 6 months later. So it's a slow train. Whereas other markets, you can quickly turn those deals. So a lot of times what happens is it's just getting stuck in various points of that process. But for us, I think the most important part of the growth was getting the systems in place, then spending money to essentially get the phones to ring, and then having the deals, then having to go that way rather than the opposite. A lot of people that I know, they get stuck in growth because they spend all money on and time on systems and process, but they forget about their advertising.
Yes.
So they have great system and process, but they're not growing, and they have a big team that they don't need.
Yeah, can't forget to promote the business.
Yeah, that's the number one is advertising. We're spending $60,000+ a month on advertising.
That just goes to show, the type of investment that is needed, to reach the goals that you guys have. You bring up an interesting point there, working so closely in and around New York City. Do you think that has given you guys an advantage? Do you recommend that, maybe investors, it doesn't have to be New York City, but do you think moving closer or moving your business closer to a major city is important? Or is this something that, if people find a pocket of success, they should just stick to it? Do you see any correlation in being closer to a big city and being successful in investing?
Yeah, I think we do because, and I can tell you post-COVID, it's been unbelievable because obviously the trend is moving outside of urban areas into more rural areas, although there's not really too many rural areas right outside the city. It's just kind of drawing that concentric circle around a major metro. That's been very successful. So I think that strategy can be duplicated pretty much in any state. Every state has their urban center.
Nice.
So that's really what we're seeing.
Yeah, very cool, very cool. Okay, so moving on to the company itself, SDF Capital, you guys had some pretty good core values as a company at RCN Capital. We just kind of refreshed and rebranded our core values as well. So you have a couple here. Do you have any favorites? What went into creating these core values for you guys? How important did you think that was as you established a business?
Right. Well, before we got coaching and training, we thought core values was just something you write that looks pretty. And I did think that for a while until we did an exercise on core values with one of our coaches, and really they embody who we are. So I find our core values to be the most important. And when we hire, it's literally tick, tick, tick. Are they checking off on the core values? So for us, it is the most important thing now. And I would recommend any business owner, no matter what industry, to have core values. One of the core values for me, I guess, being a native New Yorker, move quickly. So and we don't like taking no for an answer. Mm-hmm. So it's just to be relentless, which is what we use as a part of our core value. So those are important to me, very important.
Time is of the essence in this one.
It is. It is. And
sure.
Yep, time kills deals.
Yeah, definitely. So what do you think, as we talk about, attributes of a good deal, we move into our next segment, deal breaker and deal maker, right? So there's got to be some things that you've seen over the course of the past few years as you grow in this business with Frank. What are some things that cause a deal to break down, and vice versa? What are some common themes of success? I love this segment. I think a lot of listeners get a lot out of it. So for deal breaker, deal maker, the floor is yours.
So from a deal breaker standpoint, we see this over and over. It's not knowing the repair numbers. That will break a deal all the time. So meaning you have a roof, you have plumbing, you have knob and tube wiring. I mean, these things can cost $10,000, $15,000, $20,000 and throw the whole deal off. The other thing I would say is making sure you have some type of a profitability analysis when you're running your deals, because people don't often factor in the hold times. Every town also has closing fees that you have to factor in. So just really knowing your numbers as well. And the deal maker would be knowing your numbers. It is critical to know your numbers. And by knowing your numbers, meaning run a profitability worksheet. That's what we do in every single deal. So we need to know the holding costs are key. A lot of times investors, at least new investors, don't realize that there are very specific holding costs. There's also when you close, especially with us, you have a mortgage recording tax. So all these fees you really need to know. And then conversely, when you close, there's also closing fees depending upon the municipality that you're in that you should know as well. So really just lumping all these deals to get all these numbers together are critically important. And I would say that it's critical to make sure you have a buffer, because obviously, rehab goes over or numbers don't always work out the way. So if you have a skinny deal, we call them, you may want to think twice about that.
When you said skinny deal there, I'm imagining an Italian grandmother from New York, have an extra helping of pasta. Yeah, no skinny deals around here. I think that's a great tip too. Having that buffer, having that margin of error. Anytime you can make that a little bit bigger, that's extremely important. So some more great insights from Larry here. We're going to take a quick break. Sponsors are going to take over for a few seconds. We'll be right back with some more uncontested investing. Whether you are pursuing long-term or short-term ventures, RCN Capital has a wide range of loan programs that will help you reach your financial goals. We have loan programs for fix and flips, long-term rentals, new construction, and even multifamily properties. And don't forget to ask about our Platinum program for very experienced investors. To learn more about our loan programs, click the link in the bio or send an email to info@rcncapital.com today. And we're back with Uncontested Investing. I'm your host, Nate Zielinski, joined by Larry Friedman of SDF Capital. And Larry, one of the things I want to talk about is the trials and tribulations of this industry, right? We love promoting the success of the guests that come onto our show. But for the listeners and their perspective, right, there's so many ebbs and flows in this business. Can you talk about a time where you maybe had doubts, you wanted to, go back to an accounting firm and get out of this hectic, crazy world? How did you overcome those doubts and stay the course to where you are today?
Yeah, that's really happens frequently. So I'm happy to answer that. I could think specifically about 5 or 6 years ago, we got heavy in Connecticut and we didn't have a buy box per se, meaning we would, if we thought it was a good deal, we would buy it. The that's probably not necessarily the best buy box per se. Now we have a buy box, but so we bought a number of properties, and a few of these were very large renovations in more rural type areas. And we had 2 of these going on at one time that would not sell. They literally would not sell. The rehabs went way over. So we really were at an inflection point because we couldn't sell them. The market was difficult. So we had to ultimately refinance these. And we took major losses in that respect because obviously we couldn't pull our money out of the deals. And we had to hold them. And we held them for years. But at that specific time, we had 2 very large properties. So it really put a major dent on our cash flow. And we were nervous. We were very hesitant taking down properties thereafter. And I can tell you there were a lot of sleepless nights that went on. Yeah. Ultimately, the story worked out well. We held them. I guess time heals everything in real estate. And we sold them recently and profited. But I can tell you that is not the way it looked when we went through this.
That's got to be a major sigh of relief when you get on that roller coaster as an investor, and then you get off and live to tell the tale and be like, whew, that was a close one, right?
Yeah, totally. Yeah, and roller coasters are good. You have to have thick skin in this business.
Yeah, for sure. You bring up an interesting thing there. I feel like I get the gist of it. I've never maybe have heard it explained that way. Can you talk about the buy box and,
sure.
and how important you think that is? Because like you said, right, if a deal looks good on paper, why not do it? But I think it's important for our listeners to hear that maybe there are some parameters that should be set before you jump right into this.
Absolutely. So for us in our business, and it's changed over time, we like the median price point. That is critical for us. Typically, we like a 2-bed house is not really what we like, but it's usually 2 to 3 beds, about 1,500 to 2,500 square feet. And that's and we like to be in somewhat of an urban area or suburban area, but nothing that's rural. We're really staying away from rural markets. So we're pretty specific. Obviously, we want to have as new a house as possible. Oftentimes, it's not as new, but something in this 50s, 60s. You start buying houses before 1930, 40, it becomes a little bit challenging. So for us, that's kind of our buy box. So these 2 deals that I mentioned earlier that we looked at in Connecticut, we wouldn't have bought those.
Yes. Okay.
And we like to keep the renovation usually below $75,000.
Good.
Because once you start with these big renovations, you have a lot more risk in the deals.
Yes. A lot more can go wrong when that budget starts to, go up and up and up. That's good. I like hearing that because that doesn't seem like it's something that's a one-size-fits-all, but essentially it's just a plan that investors should have and create, right? As kind of that North Star guiding them when it comes to, is this transaction really for me, or do I want it just for the sake of having another transaction as an investor?
That's the key, because certainly there's nothing wrong with other deals, those larger deals. It's just that we don't add levels, we don't do other things. So that could be a great deal for someone else. Yeah. So right, you just need to know what you're good at and get really good at it and hone in. And I think we've done a reasonably decent job at that.
Yeah, finding the sweet spot and just hammer it home. Okay, great. I think the next direction I want to take this conversation would definitely be about a passion project of yours or a why that you have that kind of keeps you motivated in the real estate industry. It's easy to, get carried away and let real estate investing just kind of take over your life. So is there ever anything on, when you're not, answering calls and emails, is there something that you try to seek out? I know you touched on meditation, but is there something else that you've taken to another level that maybe you work on outside of the business that you think actually helps you in your day-to-day work?
So I would say, just to answer the first question about my why, it's definitely my family. I can tell you that real estate has afforded me the luxury of being at every event, being with my kids whenever they need me. Now they're getting older, they don't seem to want me around as much. But it's my family, and that is definitely the why. I can tell you that just being outside of, we talked about meditation, but recently I ran a marathon. And for me, that was a huge challenge because for years and years, I've been watching people saying, I'm going to do this. And my wife said, let's do this. And ultimately, we did run the marathon together. So I like to have a challenge. I think my next challenge is a triathlon. So I do like to have different things that motivate me and keep me busy because, as you said, this could be all-consuming. So you need to have those outlets.
I love hearing those answers, too. I mainly ask about that because I wonder if there's a type of person that, wants to do the complete opposite and kind of, hit that reset button and, kind of move more towards meditation like you mentioned, or do they want to keep something that's like extremely competitive, a goal to shoot for, like a marathon, right? Like that takes a lot of work. Not everybody can roll out of bed and just even a half marathon, the next day, right? So I like hearing, the different stories and the angles of why people choose, what keeps them motivated outside of the industry.
Totally.
Okay, so we talked about it at the beginning of the episode, trying to find that education. It really wasn't readily available when you were, deciding to make this leap into this venture. Is there any teaching, training, mentoring that you recommend our listeners take part in, or do you do any of that yourself?
No, so yeah, that's absolutely right. It wasn't readily available. And now there are quite a lot of good coaches and good programs. And actually, Frank and I recently, we run a big meetup, and a lot of people in the meetup over the years have asked us, can you help us? Can you train us? And the answer was always not, of course we want to help, but we're running our own business. Now we have an integrator, things are dialed in some more. So we do offer education, and we've started working with some select students, and it's been great. So we actually have a 3-day event coming up, and it's jointhe3day.com if any of your listeners have any interest. And we run free beginner boot camps as well, which they can just go to Real Estate Start Now. So Real Estate Start Now, and check those out.
Is that something that you guys are encouraging to be in person? Are you running that over Zoom? What is that going to look like?
So for now, we're doing it in person. So this is more so in the local tri-state area.
Yes.
And people should just definitely check it out, because we do a ton of events as well. We do property tours. We have coffee in our office. We do deal or no deal. So we have a nice community that we've developed as well.
That's awesome.
Around this.
That's awesome. Okay, so you talked about starting the training, building up a community. What's the long-term goal, or what's next, I guess, for you at SDF Capital? Is everything going to be focused on this education venture, or, as somebody that's been in multiple professions, you always kind of have that next step in mind, that next goal. So is it that education and building that community?
Yeah, right now it is. It's definitely, it's really rewarding. And, we work with students that, similar to the way we were, didn't know anything about the industry, and really are starting to do deals. So it's really nice to see that. And as we're more dialed in our existing business, Frank and I do have more time. So this is definitely the next challenge.
That's awesome. Yeah. That's awesome. So SDF Capital is the name of the company. Larry Friedman's the name of the guest. Larry, thank you so much for taking the time out of your busy schedule, sharing some great insight, a very interesting story to, end up in real estate investing, which I think a lot of listeners can take a lot from, right? It's not always the first choice, but if you find yourself in this industry, you got to go about it the right way. You got to plan, build a successful team around you. So thank you for sharing all that knowledge today. We appreciate it. For all of our listeners on Uncontested Investing, this is Nate Zielinski signing off. We'll see you all in the next one.
Thank you for listening to Uncontested Investing. Questions about today's episode or the podcast? Email podcast@rcncapital.com, and make sure to follow REI Inc. magazine on LinkedIn and Facebook, and RCN Capital on Instagram, LinkedIn, and Facebook. See you all next time.